Oh, hello and welcome, and hello. Thank you for tuning in. That doesn't really make any sense. Tuning in to another exciting episode of Un Poco Mas, the show where we give you just a little bit more. Today we are talking SoFi Technologies Incorporated, ticker symbol SOFI. Guys, not a super exciting day. We had that sell-off that we often get in the first 15 minutes. Hello and welcome, everybody. Let me share my screen with you, good people. Here we go. And there it is. I don't know why it always pops over to that view, but let's put my big head down there. So we're up 16 cents on the day, or 2%. Still kind of what we said. Trading sideways under that 750 max pain level once again on the volume. If you look at the options, you just see this again foolishly on the volume here. You just see a ton of calls for this Thursday at 750, almost 14,000 contracts. No particular reason, no big news to drive the stock up. I mean, we've had good news after good news after good news, deal after deal, execution after execution. But like I said down in the description, Anthony Noto could split the atom, and the Wall Street would just shrug and sell off the stock and short the stock. And Robinhood releases what's essentially a gold-colored credit card with a good cash back, and everybody basically pops a semi, goes from 6 to midnight, and they're just tripping all over themselves to, heap praise on Robinhood. And you might think, well, why is that? Why is it that the financial media, the analysts probably, they haven't come out and re-rated on this basis of this credit card or whatnot, or of Robinhood Gold, but I would just argue this is a nothing burger. At the end of the day, this won't be a good business for them. You had the CEO of Visa come out and say that, Robinhood is the one-stop shop for the next, digital banking. Basically, he kind of, co-opted what Anthony Noto always says and just kind of repeated it about Robinhood. Visa, of course, very, very good company, a very large company, make a lot of money. A lot of smart investment people recommend owning Visa. Personally, you know where I stand. I think SoFi is the company to actually get this done. When I look as an investor, people are like, well, why don't you pour all your money into new? Why would you invest in SoFi? New's growing faster. Well, why don't you go into Robinhood? I heard someone was saying, well, wouldn't it be perfect if SoFi bought out Robinhood? And, Tanner was chuckling about that, and I don't blame him because, SoFi is at about a $7 billion market cap, and Robinhood is a $17.5 billion market cap, so big fish generally do eat little fish. But I think overall, from a banking perspective, from a stability perspective, SoFi is the superior company, and I think SoFi should obviously have a much richer valuation. I think the company is worth somewhere 12, 13, 14 bucks right now. And I think Robinhood is quite frankly a little bit overvalued. Now, if you look at the book value, Robinhood is about 80% higher than SoFi's, but there's a myriad of reasons for that. But if you just kind of look at the objective data in terms of the annual sales and earnings, I mean, back in 2020, when the pandemic started, Robinhood had revenue just under $1 billion. They were breaking even. Next year, $2 billion. They lost $3.7 billion. The next year, 2022, lost revenue when lost $500 million revenue to 1.36, lost another $1 billion. Then 2023 basically recovered to where the revenue was in 2021, lost another $500 million. And if you look at them quarterly, top line is flat, bottom line has improved ever so slightly. And then if you take a look at SoFi, if you're sort of a long-term investor who, values stability, take a look at SoFi's annual growth from 565, 1 billion, 1.5 billion, 2.1 billion. And then even their quarterly growth, you guys know this is the write down here from, Technesis, but even the quarterly growth, far more stable, far superior. I mean, last quarter, SoFi, way more revenue than Robinhood, more earnings than Robinhood. And I know SoFi has debt, and the structure of their company is not the same, and they're probably, not going to make the same margins ultimately if both companies were able to scale. But on a dollars to donuts, belly up to the bar type of basis, I think SoFi is by far the better buy for the long-term investor. And you say, well, why do they get treated this way? It's not a huge mystery, guys. Look at Robinhood. The short interest is only 5%. And then you look at Robinhood's institutional ownership. Shocker, guys. What does the street own? The street owns 79% of Robinhood. Okay, look at the institutional put-call ratio on Robinhood. It's basically, just eyeballing it, it's like 3-for-1 calls for puts. And then you take a look at the financials, but take a look at SoFi struggling, at least here, to crack 40% institutional ownership. Institutional put-call ratio, just eyeballing it, actually more puts than calls. So I don't know why anybody's surprised by this disparity in the valuation metrics that, are sort of applied to these two companies, given the fact that, Wall Street has a massive bet on the bullish side on Robinhood and thus far has had quite a significant bet on the bearish side on SoFi. And of course, these analysts, they don't really disclose any of this stuff, but it's pretty obvious, where the agendas lie. It was funny because I was watching, SoFi Weekly, guys, and they've actually, the last episode, last Friday, they started to say a lot of the things that I've been saying all along. And when I was on that show, like some of the guys, the older hands, were like laughing at me. They're like, well, short interest doesn't matter nearly as much as you think. Neither do these analyst calls. These analysts aren't dishonest. They just have an opinion, like calling them. And then last time the guys were like, no, these analysts are just flat out lying. Like, that's the only explanation. They can't be, this wrong and this professional. They're manipulating the price. Like, it's pure manipulation, pure manipulation. I'm hearing everybody say it. Everybody was very reluctant to call this what it was at a certain point because you want to believe that Wall Street has a certain amount of integrity, that the game is legitimate, when it really isn't. And I always use the analogy, it's not that hard to win when you realize your place in the game. If you're playing Monopoly, you're the shoe. You're the shoe. You know when you're supposed to move. You know when it's your turn. You just have to follow the rules of the game. If you're a returner, you have to realize you don't drive the bus. The bus is price action. The bus is the market makers. You don't drive the bus. You don't decide on the route the bus takes. You don't decide on how fast the bus goes, when it turns, when it stops. The only thing you get to decide is when do you get on the bus and when do you get off the bus. And if you make those decisions and you're disciplined and you stick to your guns and you just basically buy low and sell high, and a lot of people here will tell you, take advantage of things like covered calls, you're going to do very, very well inside of the market. But you just need to take the emotion out of it. Why are people upset at price action? Okay, you'd only be upset. People are so offended. They're like, damn these shorts, damn the manipulation. But if you really look at it, guys, they gave you the opportunity to buy SoFi in the 4s. They recently gave you the opportunity to buy SoFi in the 6s. And some of you guys I see are like, my average is 15. What am I going to do? It's like, well, you have to learn to build a position. You have to learn your entry points. You have to learn when Wall Street is on a pump and they're trying to suck you in at the top. And you have to learn when Wall Street's trying to create maximum fear. And quite frankly, that's what they've been doing around SoFi. They've thrown, there's huge headlines on a negative basis about now SoFi creating 72 million shares instead of 61 million. But I said it at the time. I said it, to Tanner and the guys. I'm like, hey, these guys, the counterparties, crashed the stock on purpose so they get a lot more for their money. And SoFi has no objection to that. I mean, yes, it's a little bit of dilution, but they're going to dilute the stock more. And Anthony Noto is not your friend. I know people have sort of this hero cult worship of Anthony Noto. Anthony Noto is a Wall Street insider, an insider's insider, a deal maker. Anthony Noto cares about, several things. His tan, his hair, his perfectly Botoxed face, his windbreaker collection, his own vast, vast fortune and net worth. That's what Anthony Noto, my biological father, cares about. He's not your friend. He doesn't care that the stock sits down in the doldrums through 2024, 2025. He needs to pump the stock in 2026. He's looking to cash out his options, guys. You know, Anthony Noto's a great CEO. They have a great executive team, but they're not your buddy. They're not trying to make you feel good. He comes out and supports the stock to support the company. Anthony Noto's not going to sell. You think he wants to drive the price up just so Jeremy Rochelle, our chief technology officer, can dump all his shares like he does every quarter? Hold on to a few shares, Jeremy. Let's see what happens. Maybe the company's not going belly up and your shares will actually be worth something. You hold on to a few of them. Put a few away for a rainy day there, buddy. Oh my God, the first name I see is my BFF, David Redliner. It's David Redliner. Hello and welcome, sir. Welcome and hello. I glance to the right. Wouldn't you know, just my luck. It's like winning the lottery. Got David Redliner right on the small screen over there. Hello and welcome, everybody. It's Toto. Noto is not my friend. T-shirts coming soon. Yeah, and you know, Robinhood's credit card gave me a semi 6 to midnight for 3% cash back. Whatever you want to do, guys. Whatever childish, juvenile slogans you'd like to employ. Let's talk about Robin. I mean, Tevis made a good video on it, and he said, "Hey, I'm neutral on the stock. I was just watching it. I didn't have time to watch the whole thing, but basically the sentiment is like Robinhood is doing what SoFi wants to do, but they're doing it with much more, glitz and glamour, and it's like younger people. And guys, I'm here to tell you, as a long-term investor, that is not good. There are so many red flags around Robinhood. It's not just the fact that they screwed over retail and, filleted those Seth Rogen-led shorts, in the GameStop story. Of course, if you saw that movie, it was Seth Rogen, but in real life, it wasn't Seth Rogen. It was some other hedge trader. But the fact is this: if you look at Robinhood's website, like these bonus boosts, this looks like a sports gaming website. Deposit $1,000, get a $10. Like, this is not, at least for me, this is not for people that want to get their money right. And I know SoFi gives bonuses, and that's not what I'm talking about. I know they give incentives, and that's what it's talking about. I just view the whole Robinhood ecosystem as a totally different customer, a totally different mentality. For a long-term investor in the company, I want SoFi savers. I don't want Robinhood Robinhood traders, Robinhood gamblers, country club golf hustlers. Okay, that's not who I'm looking for. I'm looking for the doctors who are brought into SoFi to refinance their student loans. I'm looking for the engineers who are out there building the future and don't necessarily have time to chase every option on Robinhood. They just want to get their money right. They just want to save. They just want to build generational wealth. They want to be with their financial forever home. Papa Noto saying, "Come on home. Are you too good for your home?" If you've ever seen the Adam Sandler film Billy Madison, of course. Big winner, guys. Sorry, I'm a little bit out of breath. I think that was about 12 minutes without taking a breath or thinking or saying anything coherent. But welcome and hello. I see Oprah's Wet Cave. Regards to Stedman, good sir. Who else is here? I know, thank you, Not a Lurker, by the way. Thank you, Not a Lurker, for producing the show here today. BZ's here. Who else is going on? Gustav. Yeah, GDP, jobless claims, a lot of news coming out tomorrow, Gustav. I think it's going to be tepid. I don't think it's going to be hot. I don't think it's going to be cold. I think it's going to be tepid. It's not warm. It's just tepid. It's like a Gilbert Gottfried bit. So everything SoFi, yes, let's go. Do not sub and like whatever you do. I know there's minor bad news, but the increase in shorts, yeah, guys, and that's the other thing. It's 23% on the short interest. This is really gotten quite brazen. These shorts are quite bold. They have wolves on them, these guys. But I still see institutions coming into the stock. That's what the filings are telling me. I think institutional ownership, really at this point, we're going to see filings come out not too long for Q1. I think institutional ownership is going to be at least about 45%, and that's my opinion when you see these things kind of basically catch up. But you see it here, guys, short interest, 22.5%. Fintel has it at 23%. Days to cover is down a lot more than it would be just because the volume has been so high, but the last few days it's been back down to earth. They haven't been churning HFT, price fixing as much as they used to be. Shares on loan, actually, Ortex estimating coming down, which there's some interesting dynamics there. Cost to borrow still very, very low, and utilization at 80%. Now, it looks like they returned 6 million shares. This is very deceptive. There's all kinds of like masking that's going on that these ratings used to be much more accurate, but the settlement date 15th of March. This came out, of course, yesterday on Fintel, came out today on Ortex and NASDAQ elsewhere. But shares short 210 million, 23% of the free float, and that's a 36% increase over the previous. You could see the same basic data here. Of course, this is where they all get it, is, NASDAQ. But so Robinhood is enjoying 80% institutional ownership, 5% short. SoFi is 40% or, low 40s, maybe mid 40s tops institutional ownership, and 23% short interest. And personally, I think it's, I don't think the algos are trying to force this thing back down to 5 or 4. I don't think they want to accumulate there. I think these counterparties that want to drive the stock to 12 and 14, of course, if Uncle Bruce and others' analysis is correct, which I have every reason to believe that it is, I think they're happy just to try to accumulate along this trend line, just keep banging it off this trend line. Since the stock bottomed out back here on November 21, unfortunately I have that date memorized because I've looked at it so many times, but it's broken up through this, consolidated along the trend line here about 6 days. Mid-December popped up and has just been testing the trend line, working down in sort of this wedge, this sort of lower consolidation pattern, just bleeding down into the right, basically. But I don't think it's really broken down since where it broke through here. I think the algo is just working it along this line. It's trying to break through the 50-day moving average, has been unable to do so, but you've seen 3 major gaps down, all for sort of these fabricated FUD reasons, nothing in particular on purpose. But I just look at this, okay, 3% Robinhood Gold Card. SoFi's having enough problems with their credit card business. I don't understand really what Robinhood thinks they're going to achieve in terms of their bottom line by giving away the store. This honestly seems like more of a vanity project to me. It seems like a lot of flash, a lot of fanfare, and very little substance. So you get a discount on travel bookings. There's basically every single credit card has that. And this is kind of the same criticism that you could level at SoFi. A lot of people do this. But I just think SoFi does it well, and they target it at the right people. Who is Robinhood bringing in the front door? At least without a lot of customer acquisition costs. They're bringing in people who want to trade. They're bringing people who want to trade options. These people deploy their capital. I don't think Robinhood customers, by their nature, are as interested in sort of that long-term nest egg savings, getting all their products from their mortgages. Eventually, SoFi is going to have car loans. They're going to have small business banking. They already have all these employer benefit programs, where I see Robinhood is just moving fast. It's fast money, and fast money is easy money, but it's not honest money. That's just why I just don't like Robinhood. To me, it's just a turd. It's a little bit overvalued. I don't even use the site anymore. I don't like it. I just don't like the way this works. This is just too casino for me. Look at all the coloring. It's all so flashy. And everybody's so impressed with their UI. You get to resize things, move things around. And it just goes to show you, this is for traders. This is for power users. They want to customize the charts. Plenty of people are SoFi members and Robinhood members, and they use SoFi more for the banking, financial planning tools, where Robinhood more for sort of trading and their shorter term investing. And that's great. Horses for courses. There's plenty of room in the financial sphere, the financial services market for both of these companies. But for me personally, and I'm not saying Robinhood is a bad company. Of course, yeah, I've said it's an overvalued turd, but it's just hyperbolic. That's just puffery on my part. That's just a little poetic license. I don't know if you could say calling something a turd is particularly poetic, but it's certainly a license. I just don't want to own this company for the next 5 to 10 years. I believe there's all kinds of things. They're knee deep in crypto. I believe, Robinhood is a lot closer to that sort of one scandal away. I think SoFi is trying to be squeaky clean. I just think SoFi is planning a little bit longer term. I think they're far more conservative. That shows with who they're targeting. Now, does SoFi have any advantage? Yes, it's not flashy. Yes, it's not gold plated. I think they do. I think rates are going to come down later this year, and I think SoFi's position as the leader in student loan refis and the customers they get from those refis are going to prove to be invaluable. I think that's going to feed people into their product wheel. I think Robinhood's product wheel is basically smoke and mirrors, and it shows in their financials. These guys don't make any money, and they're not going to make any money. What is that guy? Their CEO looks like he's advertising some kind of like Pert Plus conditioner. You see how silky smooth that hair is? It's like you don't mess with the Zohan. It's going to make you silky smooth. I want a guy like Noto, a guy like Ward Cleaver hair, a guy like Ronald Reagan hair. Hair you can trust. A hairstyle you can trust in a CEO. That's what I want. Not necessarily an over-conditioned, over-product, very, very smooth hairstyle you're going to get with a Robinhood executive. So that's kind of a big nonsense rant, but it's what you've come to expect from Un Poco Mas. Guys, what can we expect the rest of this week? Well, not too much. Lowered expectations. That's what we can expect. Max Payne sitting at $7.50 the next couple of weeks. If people just keep buying those calls, retraders keep feeding that money to, my buddy Jimmy Superfly Snuka, they're going to keep killing those options. I think as we get closer and closer to earnings, if the street expects a good surprise to the upside, of course, they're going to hedge it. They're going to let go a little bit, but I just don't think the stock's going to break much above 750 at all for the next couple weeks. At least options aren't telling us that. It's also telling us that they're not really planning to push the stock much, much lower. So that's kind of a silver lining there. If you're, one of those people who likes to sell covered calls, short covered calls, this might be a good couple of weeks to do it. Now, the minute I say that, it'll probably break out to the upside, and you're going to get called, and you're going to come want to kick me square in both nuts, but that's just, the breaks. So Robinhood clearing, there's all kinds of fine print with Robinhood, and I wish every investor who wanted to go into either Robinhood or SoFi could read all this fine print. How do they make money? I believe the way SoFi makes their money, the businesses they're in are a lot more sustainable long-term. I just think a lot of these fintechs, Robinhood's going to be around, but Affirm, some of these lenders, some of these AI plays, some of these payment for order flow plays, it's just not as durable as a real bank that's coming in and bringing in deposits, building tangible book value, and doing things right. I mean, SoFi knows how to shake their stuff. They know how to shake their moneymaker, so to speak. Just to turn a phrase there, if you will. Shout out to Princess J. Anyway, guys, also big shout out to Cutes, my BFF. The only person who I think really understands me, possibly Princess J, and also Cutes. But anyway, guys, hello and welcome and hello. What a beautiful smile we have in this house. It's just such a beautiful day here in the house. I couldn't really ask for more. In any case, guys, enough about Princess J. But, Donzigot. Let's see. There's all kinds of names for me. Topolinsky. Any way you call it. Guys, Toper time check, by the way. We haven't done a Toper time check in a couple months. It's 6:10 p.m. out here in beautiful sunny Los Angeles. The day is getting longer. It's March 27, 2024 for those of you scoring at home. And even if you're alone, it's still March 27, 2024. That was an old joke they used to do every night on SportsCenter. They were talking about the baseball box scores, and they'd say, if you're scoring at home, Or even if you're alone. It's just kind of one of those funny things. That was back when cable first started, and like ESPN was one of the only shows you got to stay up late. If your parents would stay up late, let you watch Sports Center. That was pretty cool. So, guys, let me, because I basically am bereft of any ideas. I don't have the soul or the wit, they say, to shape at the point of utterance, I believe, as Bill Shakespeare said. So, let's open it up. I got about 5 minutes left in this slow-moving train wreck we call Un Poco Mas. We're talking SoFi stock. We're talking 23% short interest. We're talking everybody just tripping all over themselves to fillet Robinhood, just get down on bended knee and, talk about their new credit card product and all the exciting rewards you get with that. But it's a tough business, guys. I mean, ask Goldman, Capital One just bought out Discover's consolidation there. It's a war. It's an absolute war in the credit. You're going to hire 20 years of Jennifer Garner. What's in your wallet? Just America's Next sweetheart, Jennifer Gardner. She wasn't enough. They had to buy Discover. And don't even get me into the Ben Affleck connection. Why does everyone I bring up on this show, even accidentally, why have they all had sex with Ben Affleck? Why is that? And what does that have to do with SoFi? Me, Papa Noto, and Ben Affleck are going to go up Foley Field and have a catch. One of these days, once we convert our RSUs, 2026, hit that $25 level, Papa Noto promised me, and the note he left me in my bassinet once he set me adrift in a river. Good guy. Anyway, so I'm just going to open it up. Now I have 3 minutes. I'm going to read some of your stupid comments and then end this broadcast, mercifully. So, who do we have here, guys? I'm going to actually start at the bottom so it's a little more topical. Someone very smart told me to do that. Oh my god, it's C-Bar Engineering. Good to see you, C-Bar. Finally, somebody smart. That's who we're talking about. Noto can care less about shareholders. Thank you. Yeah, I know that. He's not actually my dad either. That might be a shock to some of you. It's hard to go backwards because you missed the whole... Klaus Baum is here. Klaus Baum is either moving somewhere, but back to the coast. He got tired of the Yakov Smirnoff routine out there in the Midwest. He's coming back. Glad to have you, Klaus. Anyone's birthday April 9th? Oh, God, I hope not. I think my birthday's April Fool's Day, given the stocks I've been buying. Doing the move. He's got the move. Try to beat the storm way out to the West Coast. You do that. It's going to rain. It's supposed to rain all weekend out here. Fundamentals suck. Himothy is here. It's really hard to go backwards, guys. This really doesn't make any sense. Anyway, premium of the options here. Ross is here. 3% unlimited with a tie into the fourth match and deposits a nice lightning rod for a previously shitty company. It's a really good move, Ross. I'm not, of course I'm trying to trash them because I'm a SoFi fanboy and cultist, and I live in a thought bubble of, endless confirmation. But affirmation. But yeah, it's a very nice move. They got a ton of good press. The connection with having the CEO of Visa there, very, very impressive. Just a really good event. It looked like, Tim Cook, the guy has a certain amount of charisma. You don't get even, like, Elon Musk is terrible in those presentations. Everyone wants to pretend that he's so good, but he's terrible. He's good at, running the business or whatnot, but... Anyway, Eric, good luck. Yeah, I don't want to own Hood, not at $17.5 billion valuation when I can own SoFi at a $7 billion valuation, just given the financials, the trajectory. Robinhood, you talk about a guy like, Gary, who was talking about proving it over the long term. I mean, Robinhood hasn't even been able to get it together for a couple of quarters. So I'm not buying it yet. Mr. Premium, the option, Eric's here, Himothy's here, AM is here, Robinhood's easy. That's what I mean, AM. Like, people are not getting their money right on Robinhood. They're just not. I would venture to guess Robinhood makes their money letting their investors lose money, so to speak. Like, they're selling your data, they're lending your shares, they're doing 10 different things, I think, to monetize their customers. And that money doesn't come out of thin air. They're not paying you for that data to be nice. Guys, this is a data broker company. This is a data broker company. They're not the bank of the future. They're not a neobank. They're a turd salad with extra dressing. It looks like poo. And I'm not buying it. Tevis isn't buying it. And neither should you. Now, I don't give financial advice, guys. I'm not going to tell you to buy SoFi, buy SoFi, buy SoFi. I would never do that. But, guys, Robinhood dominated the day, but SoFi is still looking very, very strong, not breaking down. And, 35 million shares traded today. But look at the variance, guys. The algo was working very hard, but there was a lot of big orders coming in. I mean, you can see that if you take a look at this daily, guys. I mean, look at all the candles. There's no big red candles whatsoever. Tons and tons of green candles. And these big drops are HFT price fixing. They knock it down. But there's no... Look how far this falls. And then look at the size of these red candles. There's huge green candle next to it. Doesn't even move. Little tiny trades and just pushes the stock all the way down. Way, way down. It's HFT price fixing, guys. That's what it is. This is all a fugazi. Fundamentals will win the day. Fundamentals will win the day. Guys, keeping to my word of a half hour as best I can. Like to thank you for tuning in to Un Poco Moss. Would like to thank Princess J, Cutes, Hurricane Lopez, Stock Karen, and J Money Not a Lurker for producing the broadcast. Guys, I don't know. It just looks like the stock's going to bleed sort of sideways along that trend line for the next couple of weeks, but I think we're going to see a decisive move up prior to earnings. I think everyone can see that Nodo is basically setting up for a huge beat. Thank you for joining us. It's Un Poco Moss. It's Danny Deals. Peace! I'm out.